Hi, welcome to my channel Ash Cash Stash. My name is Ash. We live in a world where financial decisions made in high towers can impact everyday individuals like you and me. You may think you're in control of your financial destiny, but there are forces at play, hidden puppeteers pulling the strings that can drastically change the course of our lives. These puppeteers are the financial institutions, the banks, the Federal Reserve. They shape the economy and in doing so, shape our lives. In this video, we will dive into the world of these financial puppeteers, exploring how their decisions on interest rates, quantitative easing, regulations, and even the possibility of a digital dollar can affect our hard-earned money. So sit back, relax, and let's unravel the mysteries of the financial world together. Imagine a day when John, a hard-working father of two, wakes up to find his savings diminished, not by his own doing, but by the invisible hand of the Federal Reserve. John, like many of us, has been diligently saving for his children's college education and his own retirement. He's been penny pinching, foregoing luxuries, all in the hope of a better future for his family. Yet the Federal Reserve, the financial puppeteer, can pull the strings in such a way that John's diligence and sacrifice could seem almost in vain. By manipulating interest rates, implementing quantitative easing, or introducing new regulations, the Federal Reserve has the power to devalue John's hard-earned savings. It can create waves that ripple through the economy, affecting not just big corporations, but everyday individuals and families like John's. John's story is not unique. It's a reflection of how the Federal Reserve's decisions can ripple through the economy, reaching into our personal bank accounts. The Federal Reserve wields two powerful tools: interest rates and quantitative easing. Picture interest rates as the tempo of a symphony, setting the pace of economic activity. When the Federal Reserve lowers interest rates, it's akin to quickening the tempo, encouraging spending and borrowing. This can stimulate economic growth. Conversely, when the tempo slows with higher interest rates, spending and borrowing taper off, cooling down an overheated economy. Now let's consider quantitative easing. It's a bit like the maestro introducing a new instrument to the orchestra. In the face of economic downturns, the Federal Reserve buys up bonds and other securities, infusing the financial system with cash. This new instrument can invigorate the economy, fostering lending and spending. But how do these tools impact your personal finances? Well, think of it this way. When the tempo quickens with low interest rates, your borrowing costs decrease. This could be the perfect time to take out a mortgage or a car loan. However, the flip side is that your savings may not grow as quickly. On the other hand, when the Federal Reserve introduces the new instrument of quantitative easing, it might stimulate the economy and potentially boost job growth. Yet, there's a caveat. If not managed properly, it could lead to inflation, causing the cost of goods and services to rise. As renowned economist Milton Friedman once said, "Nothing is so permanent as a temporary government program." These economic interventions can have lasting effects. They can either play a harmonious tune, fostering economic prosperity, or if mismanaged, they can lead to a cacophony, disrupting our financial well-being. Remember, these are not just abstract concepts floating in the realm of high finance. They are the levers and pulleys operated by the Federal Reserve, influencing our everyday economic lives. These tools in the hands of the Federal Reserve can significantly shape our financial landscape. Beyond interest rates and quantitative easing, the Federal Reserve influences our finances through regulation and taxation. Let's dive a bit deeper into this. The Federal Reserve, or the Fed as it's often called, holds the power to regulate financial institutions. This power is not just about keeping the banks in check, it's about maintaining the stability of the financial system and the safety and soundness of individual financial institutions. When the Fed tightens or loosens regulations, it can directly impact the financial health of families. For instance, stricter regulations can make it more difficult to get a loan or a mortgage, affecting a family's ability to buy a home or start a business. On the flip side, when regulations are loosened, it can stimulate economic growth, but it may also result in riskier banking practices. This was seen in the lead-up to the financial crisis of 2008. When relaxed regulations contributed to a housing market bubble that eventually burst, leading to widespread economic hardship. Now, let's switch gears and talk about taxation. While the Fed doesn't directly set tax policy, it does indirectly influence it. Through its control of monetary policy, the Fed can impact the overall economic environment, which in turn shapes tax policy. For example, in periods of economic growth, governments may feel more comfortable implementing tax cuts, benefiting individuals and families through increased disposable income. Conversely, in times of economic downturn, governments may increase taxes to cover budget deficits, which could squeeze family budgets. Renowned economist Milton Friedman once said, "Inflation is taxation without legislation." This speaks to how the Fed's decisions on monetary policy, such as maintaining low interest rates, can lead to inflation, reducing the purchasing power of our money, essentially a hidden tax. The Federal Reserve's regulatory and tax powers are like strings that tie us to the financial marionette. Through these mechanisms, the Fed can shape our financial lives in ways that are not always apparent, but are nevertheless profound. It's crucial to understand these levers of power, to see the puppeteer behind the curtain, pulling the strings of our financial lives. As we move towards a digital future, the Federal Reserve is considering a new tool, the digital dollar. It's a term that seems to have sprung from the pages of a science fiction novel, yet it's closer to reality than many of us might think. The digital dollar is a form of currency that, instead of existing as physical bills or coins, exists solely in the digital realm. Imagine a world where every dollar in your pocket is replaced by a digital counterpart on your smartphone. It's a concept that could revolutionize the way we think about money, and it's a tool that could give the Federal Reserve even more control over our finances. The Federal Reserve, for those who need a quick refresher, is the central banking system of the United States. It's their job to keep our economy stable and our financial system secure. They do this through various means, but one of their most powerful tools is the control of our money supply. With the digital dollar, this control could become even more pronounced. Central bankers could regulate the flow of digital dollars with unprecedented precision, allowing them to react to economic changes in real time. It's an enticing prospect for economists, but it's also a cause for concern. Some experts fear that such control could lead to an erosion of financial privacy. Others worry that it could make our financial system more vulnerable to cyber attacks. Yet there are those who argue that the benefits outweigh the risks. They see a future where financial transactions are faster, cheaper, and more accessible to everyone, regardless of their financial standing. But regardless of where you stand on the issue, one thing is clear. The digital dollar is more than just a new form of currency. It's a potential game changer in the world of finance, a tool that could reshape our economy and redefine our relationship with money. It's a concept that's still in its infancy, but it's one that's gaining traction. The digital dollar could become the Federal Reserve's newest string in its financial puppet show. And whether we like it or not, we're all part of the audience. The Federal Reserve holds immense power in its hands, power that can either help or hurt our personal finances. Like a puppeteer in control of a marionette, the feds control the strings of our financial world. Each tug, each pull, each release has an effect that reverberates through the economy, impacting us all. Let's take a moment to revisit the key points we've explored in this video. We've discussed the role of interest rates and quantitative easing. We've seen how they can stimulate the economy, encouraging spending and investment, or how they can cool it down, preventing overheating and inflation. But remember, these tools are double-edged swords. They can also cause inflation to spike, or lead to a sluggish economy if mismanaged. We've delved into the realm of regulation and taxation, exploring how they can protect consumers and ensure fair play. Yet, these can also stifle innovation and place burdens on individuals and businesses alike if implemented without careful thought and balance. And we ventured into the burgeoning landscape of the digital dollar, a potential game changer in the world of finance. Its impact could be revolutionary, offering greater accessibility and efficiency, but it could also introduce new risks and challenges. So, you see, the power the Federal Reserve wields is monumental. It's a power that can shape our financial landscape, influencing everything from the prices we pay at the grocery store to the amount we earn on our savings. It's a power that can uplift economies, foster prosperity, and drive innovation. But it's also a power that, if misused or misdirected, can lead to financial instability, inequality, and hardship. The puppeteer has the power to make the puppet dance to its tune. But remember, the puppeteer's actions can also lead to a tangled mess of strings, causing the puppet to stumble and fall. So ask yourself, how do you feel about the Federal Reserve pulling the strings of your financial future? Thank you for joining us on this journey through the labyrinth of finance. If you found this video insightful, consider subscribing to the Ash Cash Stash channel. We regularly explore the complex world of finance, breaking it down into bite-sized, digestible pieces. By subscribing, you'll be the first to hear about our latest videos. Don't forget to ring the bell too, so you never miss a chance to expand your financial knowledge. Stay tuned and keep learning with Ash Cash Stash. Together, we can navigate the Puppeteers stage and untangle the strings of finance.